I'm outside in an AMG, right outside, TT, two-turn baby girl, you know me, still with the dogs that I grew beside, all the niggas brown, ride and they die, gotta watch the time cause it's flying right by.
What's going on YouTube? It's your boy Chris, aka The Capital Connect, and in today's video, we're going to be going over the only indicators I use when it comes to the uni. Now, indicators are great, bro. You know, I'm not against indicators, but I do want to caution some people because I do believe some people can become blinded by indicators, right? Indicators are great confluences, right? But they are not good strategies, right? They're good supporters, but they're not good determiners. And all I mean by that is you should never base a trade idea solely off of what an indicator is saying, right? You should be basing it off of price action and let the indicator just support what you see in price action. It should never be, oh, my moving average is here, so I'm going to enter here. Like, no, bro. Like, let it be a confluence. Don't let it be a strategy, right? You know, when I first started trading, I was using, you know, moving average crosses. I was doing like the alligator strategy, and I had completely horrible results just because, like, indicators, I'll say this, they're not a good strategy for me. I'll just put it that way. They're not a good strategy for me. They're only good confluences for me. So indicators are literally just confluences, guys. Just get that in your head. But let's go ahead and jump into the indicators. Really all I use is the 9 EMA and the 50 SMA. Simply put, guys, I use the 9 EMA to show me momentum, right? It's showing me, you know, do the bulls have the momentum or do the bears have the momentum, right? 50 SMA is just showing me the intraday short-term trend. If I have both of them with me, that's perfectly fine. If I have just the 9 EMA, that's also perfectly fine. Like I said, I'm basing my, you know, entries and exits off of price action. I'm not really basing it off of an indicator. You know, if I have the 9 EMA with me, that's really like bare minimum. If I got both of them with me, beautiful. If I don't have any of them with me, that's still fine with me. So I'm gonna show you guys two examples where I have the indicators with me, and then one example where the indicators were not with me, but I still took the trade and I still caught a dub. So let's go ahead and get into the examples. All right, guys, so our first example, we are on NQ on the 5-minute chart. This is actually from yesterday, May 1st on Wednesday, right? So first things first, when it comes to the uni, guys, you already know we are looking for a sweep of liquidity, which we get here in the form of taking out London's low and New York AM session low, right? So you got a sweep of that liquidity there. Now we just need to find our breaker, right? Our breaker is always going to be the last bullish and or bearish, depending on the type of setup, candle before the sweep of liquidity. So in this particular example, this is the last bullish candle before the sweep of this low, right? So that is our breaker. And now all we need is just a fair value gap that overlaps with that breaker, which we have right here. And this is your uni, right? This is your uni, okay? Entry is at the opening of the fair value gap, so the beginning of it, right? I know when I say opening, sometimes that confuses people. So the beginning of the fair value gap, stop loss below the fair value gap candle, TP at the recent high and or recent low, depending on what type of setup you're taking, okay? Now, looking at this, guys, where are my moving averages at? My 9 EMA is underneath the zone. The 50 SMA is underneath the zone. This is beautiful, right? This is beautiful, right? So if I play this out, right, that's your entry right there. And if I play this out a couple more candles, boom, TP smacked. And then I believe it eventually came back and you would have been stopped at break even right there. Definitely right there, right? But then it eventually just continued taking off to the upside. And this is a beautiful trade, but pay attention. Again, we had the 9 EMA with us and we had the 50 SMA with us. And when you have both of those with you guys, the trades typically are, you know, bigger, just because, you know, when you have both of them with you, it's like you just the stars are aligning, right? The stars are aligning. If you have just the 9 EMA with you, you may be going against the short-term, you know, intermediate or the short-term trend. So, you know, just do with that information what you will. But again, guys, indicators are lagging. They're just good confluences. They're not good, you know, strategies. They're good supporters, not good determiners. So, you know, when you have both of them with you, though, I have noticed that you can expect a bigger move with the uni, right? But let's go ahead and go to the next example. All right, guys, so for our next example, we are still on NQ right now. If I go to the 1 hour chart, we can see right off the rip, we are bouncing off of a 1 hour bullish fair value gap. So that has a higher time frame confluence. Now, if I go back down to the 5 minute, we can see that we have swept liquidity, right, in the form of this low from London session, right? We took this low out, right? So that's our liquidity sweep. Now we just need our last bullish candle before the sweep of that liquidity, which we got right here, right? This is our last bullish candle before the sweep of that liquidity, which is now our breaker. And now we just need a fair value gap to overlap with this breaker. Now, this is a scenario in which you would have to play it a little bit differently, right? Because as you guys can see, not only do we have 2 fair value gaps that overlap with the breaker, but then we also got this fair value gap sitting way up here. In this scenario, guys, right now, this is totally up to you, but in my back testing, you know, you can do this and it is safe most of the time, right? Obviously nothing is 100%, but when you have 2 back-to-back fair value gaps like this, you can just go ahead and combine them. Right now, some of you guys may be thinking to yourself, okay, Chris, well, if you're going to combine them, how come you're not, you know, using the fair value gaps that are lower? Well, this is where the moving averages come in at, right? Look at where my moving averages are. They're right underneath this particular entry, right? Now, if we break through both of these fair value gaps, and we break through the moving averages, and we break through the breaker, I'm more than likely just not going to want to be in this trade, bro. So that is why I'm not including those 2 in my, you know, fair value gap that I'm combining. So, you know, do your own back testing with that. Don't just take my word for it, but you know, you could combine both of these fair value gaps. So now this does follow the rules in which it overlaps with the breaker, right? Enter at the opening of the fair value gap, stop loss below the fair value gap candle. And then we're just targeting, you know, opposing liquidity. So first TP could have been at, you know, London's high right here, which would have gave you a little bit over a 1-to-1. And then the last and final TP could have been at yesterday's high on this particular example. If we play it out, right, boom, that's your entry right there. You're triggered in, right? Play it out a little bit more. Boom, boom, boom. Plays around for a little bit. TP1 smacked. Played out a little bit more. Boom. TP2 was smacked. You would have been done for the day right there. Now let's go to the last and final example where the moving averages are actually not with you, but the trade still works out. And I actually made bank on this trade. All right, guys. So for my final example, we're still on NQ. Y'all know NQ is my girl. 5-minute chart. As always, I'm staying on the 5-minute chart for the most part, but first things first, let's go ahead and find our liquidity sweep. Liquidity sweep right here. Boom. We took out Asia session low. All right, that is your liquidity sweep. That's box number 1 checked. Okay, box number 2. Where's our last bullish candle? Our last bullish candle before the sweep of this liquidity was right here, right? This is our last bullish candle before the sweep of that liquidity. So that is now our breaker. Now all we need is a fair value gap to overlap with this, which we can obviously see is right here, right? This is our last, or this is our fair value gap that overlaps with this breaker. So now all the rules have been met, guys. So now we're just going to be waiting for price to come back down here. Now, let me go ahead and play it out a little bit more. Okay. Now I know some of you guys are probably thinking, Chris, why would you take this when, you know, the uni was set up in a previous session, right? And now we're in New York session. Like, why would you be confident in taking this? Well, if you guys see this, right, we got relative equal highs sitting up here, right? These are equal highs sitting way up here. Let me redraw it for you guys so you guys can see. Right, we got relative equal highs that line up with London's high. So I know now that this is a strong draw on liquidity. Okay, so as you guys can see, my moving averages aren't even with this particular entry, right? Your entry would have been at the opening of this fair value gap, right? My moving averages aren't with me. But again, guys, moving averages are good confluences. They are not good determiners, right? So just because my moving averages aren't with me, it doesn't mean I'm not going to pull the trigger on this trade, because I'm looking at price action. I'm seeing, okay, it makes sense for price to react from this fair value gap, right, to go from internal to external liquidity, right? Internal liquidity in the form of the fair value gap, external liquidity at the highs, right? It makes sense to go from internal to external, right? And go ahead and take those equal highs out. That is a strong draw on liquidity, right? So you would enter at the fair value gap, and my first and only TP would have been at those equal highs, which would have gave you 80 points, and you would have been good to go with this particular trade anyway. If you ain't cool with 80 points, I don't know what to tell you, bro. I don't know what to tell you. Right? That's more than enough money, you know, to be all right when it comes to trading. So that's really all I got for today's video, guys. The 9 EMA, 50 SMA, right? 9 EMA is for my momentum. 50 SMA is for my intraday trend. I just want to know, is the short-term trend in my favor? Again, they are good supporters. They are not good determiners. I'm not necessarily always looking for my moving averages to be with me if I know price action is on my side. So go ahead and backtest this, guys. Go ahead and add this to your charts. If you have any questions, as always, just drop them in the comments and I will make sure that I answer them. But that's all I got in today's video. I'm gonna catch you guys in the next one. I'm gone.